Hey, what's going on, guys? Happy Tuesday. We just announced the winner for the TechBuds Apparel giveaway. So if you guys did enter, make sure you guys head on over to the TechBuds Apparel Instagram and see if you actually won our Digital Storm custom PC plus $1,000. And congratulations to the winner. So let's go ahead and jump in right into my screen. And there's quite a bit that I actually want to talk about. So what happened today? It's really the Dow Jones that really dragged down the entire market. I'm not too sure if you guys heard. So again, this is going to be a quick little update. I really hope that you learned something new. And if you can do me a solid and a favor, smash that like button if you did. And please consider subscribing, of course, if you learned something new. So one of the first things that I want to talk about is oil prices. Oil prices once again hit 7-year highs. This is between the tension of Russia and Ukraine, Russia being one of the largest oil producers in the world. Again, oil prices per barrel hit a 7-year high of $104 a barrel. It's expected, if things get worse in Russia, it's expected to potentially even be able to hit $140 per barrel. This is something that we haven't seen in quite some time. And we actually spoke about this last week when things were kind of breaking out over there and the tensions were arising in Russia and Ukraine. And a lot of people were asking, okay, well, what goes up if they do go into war, right? And we talked about the series of different oil companies. These oil companies, the thing that I pointed out about these is that none of these oil companies were cheap. These oil companies were already overpriced. They were already doing well. But guess what? It's not about how overpriced something might be. If tensions do arise and as this war began to kind of break out, that means that demand level will only continue to increase and scarcity and potentially supply is only going to get more difficult, especially for import countries such as the United States. So this is why we're seeing something like WTI making new highs. Again, it's not just WTI. Check this out. USL, right? Or again, a very popular one, UCO, another very popular one. This one's USO, right? United States Oil Fund, making new recoveries, right? This is an overall year chart. So we are back at previous prices that we haven't seen really since 2020, the early start of 2020. The one that I added to my watch list today is Chevron. Chevron gained nearly, really over 4%, including aftermarket hours. And again, the thing that I need you guys to know is it's not that any of these stocks are cheap. They're not cheap. They're very expensive. But it's understanding where you can kind of put your money during these very uncertain areas, right? What is bullish when war is happening in Ukraine and Russia? That's what I'm trying to express to you guys. It's not that these are good investments, that these are something that you want to buy and hold for a long period of time. These are different intentions. This is kind of a way to almost hedge the market. It's a good way to understand what goes up when the current markets are going down and why they're going down. As we're talking about markets that are going down, I wanted to provide you guys, of course, with a quick little update on the oil stocks, but also I wanted to provide you guys with an update on what drove down the market today. And that was bank, right? We've been talking about interest rates going up and it being more expensive to, of course, when it comes down to higher inflation rates, right? The way that the Federal Reserve actually moderates this is that they increase interest rates in effort for people to spend less. And with this, they can moderate inflation rates. And this is not good for banks, right? For lending businesses. And not only just that, but also bond rates are super, super low as of right now. And they're going to continue to most likely be low. And this is why you saw a huge dive today. Check this out. American Express down 8.4% today. Not just American Express, but we also saw Visa down 3.3% today. We saw Goldman Sachs, again, another banking institution, 3.3% down on the day. JP Morgan, 3.77% today. I even went ahead and looked into Bank of America, 3.9% today. The reason I'm talking to you guys about this is that I want you guys to understand the correlation, right? With the talk of higher interest rates due to inflation rates, right? And bond rates being very low, this means that these specific institutions will most likely continue to sell off until they identify a support level. The reason it's very useful information for people like you and I is, well, I don't know about you, but I'm not invested I don't own any Bank of America stock yet. I don't own any American Express stock yet. And it's not that I need to buy any right now, but it's understanding that this is what is causing these stocks to go down and become cheaper. And guess what we're in the market to do? At least myself. I like to buy stocks that are cheaper that will most likely recover when things get better. It's not that things have to get better soon, but I understand what is causing them to drop. So when I begin to understand what is causing them to drop is no longer in effect or it's getting better for them, then again, that's where we can then expect the market to begin to recover. I want you to understand the why. Why is the market selling off? Interest rates, inflation rates, bond rates, right? This is what's causing banking institutions to drop right now, because it's more expensive to lend. Less people are willing to then borrow money. And if less people are willing to borrow money, then less people are willing to pay interest. And if less people are willing to pay interest, then of course, these banking institutions make less money. So when things get better and it becomes cheaper to lend, then again, this is where these banking institutions begin to recover. Understand the correlation. The goal is always to understand what to do, not to be told what to do. And now that we wrap this up, I also want to give a huge shout out to all the people that partook in TGT. TGT, which is Target, pushed up 10% today, beating expectations, an amazing recovery. But one of the things that you need to take into consideration is that almost every reaction tends to be an overreaction in the market. Target has not been doing very well. With that being said, it's great to see that it gapped up, but normally what we see shortly after is some form of correction. Just be aware of that, right? Understand that its previous direction was pretty bearish. It's nice that it gapped up, but again, don't be sold on the idea that now it has to recover. This is not a time to be greedy. This isn't a time to be scared either. I'm not here to instill, fear in any of you. I want to encourage you to be selective. That's all I think that we should be in this position right now. With even these banking institutions, right? Even with those stocks, even with oil stocks, right? That are very expensive, but they're bullish. With the banking institutions that are very bearish right now, but they're cheap. It's not that you should be scared or that, oh my God, I don't want to touch anything right now, but it's that you begin to ask yourself the difficult questions. Maybe now's not the best time to invest, but maybe I can set alerts, add them to my watch list, and follow up with them when direction is in my favor, right? Or take light enough position size that I have some skin in the game in effort to be able to tolerate the risk that I take on. Again, it's the difficult questions that are not just a yes or a no, but by understanding what is going on in today's market, it's times like this that can build a brighter future. And I hope that makes sense to you, right? It's every previous recession was viewed as an opportunity. Every current recession is viewed as risk, because it's very easy to look back and to be like, hey, that was very smart of me to buy banking institutions when they were at their lowest point. I'm not saying that they're at their lowest point. I'm just saying that maybe now's the time to pay attention. It's not that you should invest in them. It's that maybe it's time to pay attention, right? Add a watch list, create a watch list, set effective alerts. Let them bleed, let them sell off. But it's knowing when to strike, right? Knowing that they are cheap. That's the difference. It's not being told what to do. It's understanding what to do during uncertain times. And that's what I love talking about. So if you guys want to connect, I also do have a free Discord group, and that's going to be the first link in the description. Down below, first link in the description, it's my free Discord trading group, and you can network with thousands of members all over the United States and all over the world. If you want to be able to watch me trade live every morning, we had an amazing live trading session today. I traded Tesla and I still came out in the green. So if you want to be able to watch me trade live as soon as tomorrow, click the second link down below, or at least take 1 minute and click the second link, learn a little bit more about it, and see if the Learn Plan Profit 2.0 team and my daily live trading sessions are a good fit for you. I hope that you guys smash that like button. I hope that you guys are excited for tomorrow at Market Open. And most importantly, I hope, like always, you guys end the year on a green note. Take it easy, team.